Hello, it's Fred Atwater here. I'm trying some audio with the video here. I'll turn it off here in just a second. All right, hey man, I'm experimenting with this, and I'm gonna see what I can do here to look at this. I just got home a few minutes ago, and pulled up STX for you here on the upper left. I don't know what trading platform you're using. This is Thinkorswim. Dude, I looked at this and I'm like, hey, good entry on the long. And I'm going to do it. When I said I was practicing the JN, Jeremy Newsom thing, I was serious about this. So I have a draw tool here. And it looks to me like you entered somewhere right in that area. I think that's a valid call. Absolutely based on the chart, based on real life traders, the way they like to do things, and the way that makes sense. Technically sound entry. You told me you bought the $35 long calls, which are right down here. I also very much agree with that, those longs there. And then you told me you bought or sold the 47 shorts, which are right about here, which I also very much agree with. And then with that type of call spread, that is what you're looking for in the stock, and it's doing exactly that. Let me clear off the drawing there and jump over here to the Analyze tab. I don't want that thing. I want risk profile, if you're following my screen there. Right now it's a flat line. I have to get my mugshot out of the way here. Maybe I'll put it over here. That'll work. The way to do this that I'm going to do, I'm going to put STX here. There's nothing here, and I got to add simulated trades. I had already pre-typed STX in here. Options board here. You said you sold the 47s, which are these guys right here. The 21 April 47s. Okay, and there's I just stuck a sell in there. I'll correct the contracts and the price here in just a minute. And then you did a buy over here on the Jan 2019, and you said you did the 35s, which are these babies right here. Okay, perfect. I got those in there. I need to correct the contracts down to 3, which is what you told me. 3 contracts, and then the price you entered in here. Wow, look at that, 1505. That's doing really well for you. 13.06 here, and then you said you had a sell here at 0.84. Okay, perfect. And then I'm going to jump up. So that's the add simulated trade function 3 at that. Of note here, when you track these for yourself, do this. Write down your buy price here was 1306. Okay, do this like on an Excel sheet or something like that, and then do brackets around here for your 0.84, because that's what you sold these. And what does that math come out to? That's let's do public math here. That's a 2. That's 10 minus 8. That's a 2, and then there's a 12 here. So your adjusted cost basis on this this spread is $12.22. I think you're doing very, very strong with that. Let me clear that out, and then we'll jump over and look at the risk graph real quick. So draw tool off. Let me look at the risk profile here. Okay, that's a pretty nice risk profile you got going on. Right there. The middle line here on this is the current trade price, 47.20. It looks like. Now, see, the reason I want to do this in video format is here. I don't think you should do anything with this trade because it's working. All right. You'll see, in my opinion, and I've been doing this for quite some time, and I used to do this until I was coached on how to think about this. But while you're managing that short side of the spread, it is okay for that number to look like it's a loss, because it's not actually a loss, because the long side of your spread is increasing in value. And what you were asking me is, hey, should I buy it back, here on a pull or roll out? And my opinion, it's your money, do whatever you want with it, but my opinion is no, and here's why. Here is your profit line right here. Let me turn, that's as we sit today, and I can see exactly down here where the crosshairs are on the lower right. It's going to be a price of exactly where you are for profit. I can see as of today it looks like $53 dollars and something exactly in profit. If you had to jump in there and buy, close the whole spread, that's referencing the whole spread there. But all of this space here that is up here in between the purple line and the turquoise line is theta that is remaining for you. So you have several hundreds of dollars sitting here in theta that you can still collect if you just sit on that trade. Now, me personally, I would let the pairing of those two stay through the next several trade days, because look at let me get rid of the draw tool. Let me move my nugget down here. The way this baby works here, this is your break-even low side, and then check out how the line here it approaches zero, like way out here. So risk in your particular trade setup is to the downside, where that line drops below zero right there. All right, I think you should hold on, but that's just me. And then when it comes time, you gotta, and the reason being, because I would let this theta decay occur right here. Let me show you something here. Let me turn off the draw tool. Show you. Hopefully this will pop up. This is not a simulated trade for me. This is a real trade. S-Bucks. I think it should auto. Whoops. I think it should auto populate here if I do this. No, it did not. Okay, let's go back to your STX that's there. So when it comes time to roll these, or do something with spread, the graph here tells me you can always just sell the entire spread for profit as long as the stock is moving up. It's advanced thinking and a little bit counterintuitive to think that, oh, I kind of want that stock to go down so I profit on those short calls. No, you actually want the stock to go up. And then you can do a net debit roll up or roll out. You can do a level roll out. So 47s, after some of this theta decay has occurred, you can roll that to May, or if the stock price jacks up to 48, 49, whatever it is, then you roll that up for a net debit to cash, and the progression of this spread is very important. So you got to take a snapshot in your mind, of what this is right at this moment in time, and understand that when you roll these up, this graph is going to grow and your profits are going to grow. You generally want the stock to flow up. You don't want it to gap up, like to $90 or something. You're not going to make any money that way, because the deltas and thetas they're going to match, and you're just not going to make any money. But as long as it's doing kind of what it's doing at this point, my recommendation is just hold, which is an advanced option strategy. And all my spreads look like this. I build this relationship with deltas and theta. Letting the delta is the push, the underlier, that high delta in the money leap option that you bought, and then the theta decay occurs from the short side, which you sold. And I man, you got a lot of theta decay left in this thing. I would not buy it back yet. I would wait about 2.5 more weeks, maybe. The 21st of April is the expiration, so which that week. So somewhere like maybe the 3-4 days prior to that, maybe that Monday or that Tuesday, I would go ahead and then that's when I would execute that. I'll help you through this trade if you want. As long as the thing is going up, you're going in the right direction, man. Don't get too hung up on the fact of seeing negatives on that short call side. The trade's making money for you. All right, call recorder's gonna run out of time here, so thanks, man. Good luck to you. Good luck, and it's your money again, so do whatever you want with it. All right. Looks like my video is gonna end in 3, 2.